low of the day. But to me, it got the objective that I thought it would get. So if you are long, I would take at least half off at the 15 low. Next stop, 15-minute moving average and the top of the channel. I think we will get to the top of the channel. We reversed up after trying to break below the channel. However, we can get there by simply going sideways. For the bears, it's an opening reversal short below 3, but we have consecutive bull bodies and consecutive sell climaxes. So it's a low probability short. I think the odds are the picture will be confusing. The bears will be hesitant to short until the market corrects for more bars, and the bulls will be hesitant to swing. So we'll probably be in a scalping type market. When the bars are this big and the range is this big, scalps are 2 to 4 points. Can we simply go straight up here? We can. We did basically that last week over here. Only a few bars down for the major trend reversal. Usually you get more bars when the market tries to create a major trend reversal. Best case for the bulls, maybe a test down to the 1 low, forming a double bottom bull flag. That might be the easiest trade for a swing up to the top of the channel. Bodies, not particularly big. 3, a smaller body, but as you can tell from what I'm saying, I'm not particularly bearish, despite how strongly the market sold off yesterday. I think we'll probably get 2 legs up after whatever sell-off we get. I'm assuming we'll try to test the 1 low and maybe form a higher low major trend reversal. So buyers or sellers below 3, probably buyers, but minimum stop probably below 1. So you have to risk a lot. For the bears, opening reversal short, probability is low, but risk is not very big. So you short below 3 or 4, you risk to a new high. The risk is small, but so is the probability. In bear trends, the market tends to form highs of the day early, like yesterday. I mentioned that yesterday, right? In bull, and also the market often sells off into the close. We've done that for 3 days now. And at this point, the market may have run out of traders willing to sell. So it's possible that the bulls, the traders currently holding stock, might be unwilling to sell low. They may only be willing to sell high. So, and the bears will start to become hesitant to sell too low. They'll only want to sell high. And that can result in a rally. If no one wants to sell too low, right, the market has to go up to find sellers. Also, bull scalpers will start to look to buy pullbacks, betting on a second leg up. So I think we'll probably enter a trading range and try to get a higher low major trend reversal. Suppose we sell off sharply here, that's fine. It does not change anything, right? I think the odds are after consecutive sell climaxes and the reversal up from the bottom of a channel, we'll get at least 2 legs up and at least 10 bars, maybe on the 10 bars on the 15-minute chart, not just on the 5-minute chart. You can see clearly 3 pushes down on the 15-minute chart. Bears trying to duplicate yesterday, opening reversal at the moving average. I think more likely the opening is going to be confusing, in other words, sideways, and disappointing. You know, for the bulls, 3 bars up, and then we get a big bear bar. Disappointing for the bulls. Bears have a big bar down here, but we're still above the low of the day, and we do not have consecutive bear bars. So swing short only, and right now swing buy only. Best choice probably wait. I don't have a problem with being long or short, but I suspect that this is going to be a confusing opening. We have big down here, big up here, right? So big down, big up is usually big confusion, and usually the result is sideways. Bulls disappointed by 4. So far, bears disappointed by 5. Look at yesterday, the reversal down had a bear signal bar. Today we have a bull signal bar. Yesterday, the entry bar 4 had good follow through 5. Today we have a good entry bar 4, but so far not a good entry bar 5. So again, more trading range look to today. What about selling on a stop below 1? I think this is going to be a trading range open, and therefore selling on stops below things is probably a losing strategy. So I suspect that if we drop below 1, we'll find buyers, not sellers. Although we obviously could quickly move down for a measured move to yesterday's low and yesterday's close. Consecutive bear bars, are we always in short? We might be. You know, and as I said, I thought the bulls would need a major trend reversal, which they do not yet have, but we could get it over the next few bars. Some bulls might buy with a limit order, 1 tick above the 1 low, and then put a stop, and then 1, 2, or 3 ticks below, knowing that they're taking a low probability trade, but betting on the double bottom with the 1 low, and then upside breakout, so they risk 2 or 3 ticks to make 20 points. They don't care if they lose, 70% of the time. I think in a situation like this, it's better to buy on a stop after we get a reversal up. You cannot ignore the bars to the left. We're in the middle third of the prior bear leg, so there are always sellers here. Right, the bears, a lot of the bears will look for a bounce somewhere up into the middle of the last bear leg to short. Strong enough breakout, so probably more down, right? Traders are shorting the breakout. Do I still think major trend reversal early on today? I do. Testing the breakout point above the 81 high. Tail, so some buying into the close of the bar. For the bulls, higher low major trend reversal, but 3 strong bear bars makes buying above 6 low probability trade. Probably the first reversal up will be sold, and we'll get at least a little bit more down. 6 might become a measuring gap, taking us down to yesterday's low. Small wedge, 3 pushes down, 1, 6, and 7. Higher low major trend reversal, but a lot of selling on 4, 5, 6. Probably sellers above 7. Low probability buy. Let's say it has a good bull bar closing on its high. That would increase the chances that it's the low of the day. But 4 and 6 in particular are big enough to make the probability for the bulls small. Nothing has changed, right? Big down yesterday, big up here, big down here. Trading range type of price action, big moves up and down. A small version of, this is a 5-minute version of what took place over here. Big down, 60-minute chart, big down, big up, big down, big up, big down, right? Lots of big reversals resulting in a trading range. Even though each leg was very, very big, the market still went sideways for a lot of bars. So I think this is what the 5-minute chart will be doing today. Right, this is the 60-minute chart last week prior to the breakout. And the 5-minute chart to me looks like